Hello. Hello. Good afternoon. Welcome to another ES Futures trading stream. This is the market update for today, Thursday, July 27. It is 12:35 p.m. Eastern Time. What the market did. Let's take a look what the market is doing. We have today, let me do something before I am what I'm doing here. I just want to update something here before I continue doing this. I'm sorry for the delay. That I should have been prepared. Okay, before going step changes. Okay, I got it. All right, the market today opened with a gap, a significant gap to the upside. After this volatile day, the market, we were talking about how this market, after all this movement, after all what happened yesterday, it closed just right where it opened, pretty much right where it closed the previous day. So nothing happened actually. And the overnight inventory was extremely long, with multiple distributions here. At 1, 2, 3, 4 distributions, and we had, the market gave us a spike to the upside after GDP. The hardest times for me have always been when the market opens inside a spike, because it is a neutral opening when the market opens inside this overnight spike, because it's not rejecting the higher price or the lower price. In this case, it was higher because the spike was to the upside. When it's to the downside, it's not rejecting lower prices. But having in consideration that the overnight was extremely long, okay, overnight inventory was just very long. What do we do here? There are trades that call market highs. When the market has a breakout, look at this high here. This high is the same reference for the medium and smaller time frames. We can see here the weekly, the same high. We don't have nothing about that. This is all sitting by itself alone here. Same in the daily here. But in the daily we have another one before the market got a new high. What do we do here? Okay, I say, if these trades are, if there's breakout trades that are called breakout trades here, the bigger time frames use, it is very hard for us small traders to make up our minds after the type of day that we have yesterday and the kind of opening we had today. We have this big gap to the upside. It is really hard to make up your mind. No, this can have upside continuation because it's a trade to the upside for a bigger time frame trading. I was looking, have to be honest here, I was looking to the upside, and it has started. I just started something to the upside, some calls there in the SPY that that were based one way of thinking, okay, but we always have to be adjusting all the time, based on the information the market is providing us. And what is this information? What the market gave us to us? Market first gave us this huge, tremendous amount of volume here, the big blocks here. One block being almost 1500 here, and the next thing high volume here. So we were talking in the morning about how this could be. There's the potential of something big coming out of this, either to the upside or to the downside. I changed my mind here. I guess I was wrong, right? The market just proved me wrong here. When the market started to trade to the downside and started to having accumulation here, more volume here. Okay, this volume is below this profile, and accumulation even below that. And overall, okay, market overall really had good volume. We have a directional move, good volume. So this is more. This is more than just. That's when I thought that this is just more than a counteraction to the overnight inventory. There's something going on here, and particularly also because of the gap, there is going to be a lot of traders, meeting the margin calls here, because they are way underwater from yesterday. They were aiming to the downside, the market open to the upside, and when all these movements, when all these settlements happen, there's a lot of buying that happens. And still, even that, the market keep going lower. Okay, this is when I decided to take my chances somewhere in this area and added a little bit more down here. And with my stop first, my stop here was this high. Market taking this high was, I'm out. It was the risk. I decided to ignore this halfback here and just base my trade in the directional move with volume. Not just volume here overall, but also volume in the years. It started to dry here. Okay, it started to dry here. And the next thing here is monitoring the trade for continuation. What the market can be doing here. What the market is doing. So early, we talk about how big gaps are harder to close. They're also closing the big gaps are low. And if it is going to be closed, the selling usually happens or starts from the very beginning in the market, from the very opening. There was increased volume. It was a different kind of selling this. The next thing is where this market can be bought. All right? Because the markets don't go long, don't go down or high forever. There's a break, there's a rally, then range, and then break or rally, whatever. It depends. And I decided to monitor these distributions from the overnight. How the market trade around these distributions. Okay. Closing this distribution targets the opposite side of the distribution. Closing this distribution targets the opposite side of the distribution. Closing this distribution targets the opposite side of the distribution, which is way down here. Once the market took or closed this distribution, getting back inside this range, look at this. This is big range. We have 1, 2, 3, 4, 5, 6 day range that we have here now. 6 day range. Trading back inside this range targets the opposite side of this range. But first, the market has to deal with something. First, the market has to deal with the 4600. First, the market has to deal with overnight low. First, the market has to deal with previous day POC, previous day low, before getting all the way down to here. And what were the odds that this were some kind of movement, that something can happen around this area, in this area? You notice now this high becomes relevant, this high becomes relevant, this high becomes relevant. You could see how mechanically the market was being sold. This was good. How mechanically the selling was being conducted. Market has volume. but it is way up high. The market has re-entered the previously range, which targets the opposite side, but what the market is doing now is the question. Okay, not the market what will do tomorrow or later. Okay, what the market is doing now. Okay, what the market is doing now. When I started to see this bursts to the downside, this spikes to the downside, I started to close my position around half back here. The last one closed kind of like around this low here. In this, not in D. I didn't wait until D. I just, trading also is not exacting. Okay, I closed this trade with a loss, and this one, which was a bigger one. I have a bigger position here. After I reassessed risk up here, I decided to take my chance to the downside. And it worked. I was lucky here. Yeah. The other thing to monitor, it doesn't matter what happened today. Almost, right? It almost always doesn't matter what happened. More likely value is going to end being higher than yesterday. Just for value to close overlapping to higher, there has to be a big break here. This break needs to have downside continuation here. The market didn't have that. We didn't have that. So as important as it is to assess the risk, it's also monitoring the trade. Now, the market has ended. We have a trend here. 1, 2, 3, 4 periods of market going to the downside with really high volume here. Really high volume. This is more than just a counteraction to the overnight inventory that is super long. The odds are high that this is just more than that. What plays against that is this high. Now, rotation. We have rotation here. How high this is going to go, when the next rotation is going to start. Next, what things are important to me now? This was important to me. The market making a high in the overnight and not taking, the regular trading hours not taking that high. The gap has been closed. Which is not such a good sign to the upside. Now we have two distributions in the regular trading hours. We have this distribution here in the upper side and another distribution here down here. Closing these distributions, if the market can close this distribution, can, for me at least, or at least in the short term, it will diminish the importance of this break here. Okay, if there is something serious to the downside, the market will keep these distributions open. The market will build value here. The market is about to close the distribution, just one tick. Now, what will happen, or what can happen if the market closes this distribution to the tick and just keep going to the downside? That's another different thing as well. We are constantly analyzing, reassessing risk here in the market with all the information that the market provides us. The same information that I can see, you can see as well. But the type of trader you are could be way different than the type of trader I am. The information that I have here, I can use it to do something to the downside, to the upside, reassess risk, and go in the opposite direction, or keep my trade here, or whatever, right? But I am doing something here. I'm making my adjustments. What type of trader you are? That's the question. The information that I have here was valid to me. I used the information to be in a directional trade to the downside, aiming to close the gap. That was the trade. Some problems, some buying expected around half back here, and the high also. The closing of the distribution of the overnight coincided with the high of yesterday, with the high of this 6-day range. Okay, that was the direction, that was the ultimate goal. Okay, if the market comes close to my goal, so I had those things before going in the trade. And I had those things because I do my homework. You have to do your homework. When you do your homework, it seems so easy, but it takes time. The first time I started doing this, because that's what Jim mentioned, we have to do it, right? If I really I consider a career and try to be serious here, this is something I have to do every single day. The first time I did this, it took me like, I guess, 3 hours to do this. And what I wrote in my was just pure labels, right? I wrote this label here, this label over here, but the more you do, the more you will start to notice some subtle things, some what we call nuances there. You know? The gap, for example, is one thing. Closing the gap is another thing. You know, this distribution, notice how this distribution has not been closed. What we were talking about, this distribution. Relative to volume, what happened with this, the whole trade relative to volume? What the intraday time frame can be doing? All those things come to play. Doesn't mean I'm going to do a trade, but this is information that is going to be used, that I more likely going to use in the future. If this low, for example, stays, the odds that this is some serious movement to the upside are reduced here, because this is just as mechanical as this one is. The difference of this day from previous day is the volume here, really high volume here. Now, the information that I used to go short here, the same information, another trader can use that information to go long here. Okay, how that can be possible? It's just because you're a different kind of trader. Understanding what trade is about is also important. I have mentioned multiple times before this video of Pete Steinmeier. Okay, I got that dog here. Where is this? Let me look. Let me see if I can find library. Let me see if I can find the video. Of course, when I want it, I won't be able to pull it out to find it. Just give me a second. Let's see if I can find it. Okay, where this is? Library. My library. History. No, I don't see history. What's later? Playlists. I guess I'll find it in my playlists. Brett Steenbergen. Food Innovator, Jim Dalton. I guess it's in Jim Dalton James. I'm trying to find the video. I'm trying to find the video. Course of one coin. Okay, I got it here.
And that doesn't happen anymore.
This one. He's selling a software here some years ago, 3 years ago, I guess more than that. He along Pete along with Jim were the guys that in the 70s started Market Profile. Market Profile is just a way to this is a distribution code. It's just a way to organize data. And Jim was a man financed his book Marketing Profile, and that's how everything started. And what he explains here, I guess in the first part of the video, is what trading is about. Okay, it's very important also to understand what trading is about. Where the offer meets the demand, and what can we expect when we trade, when the market has, the market, for example, it helped me to understand something here. Yesterday, for example, I don't have it here anymore, but I hope I have a screenshot. Yeah, I have a screenshot here. I have the opening. We have high volume here in the opening. And there's a lot of trading here around this high volume. No big blocks, just high volume here. And this area, I feel the whole thing, this whole thing is filled with traders that are going long and that are going short. But somebody has to be wrong. Both cannot be right here. Somebody has to be wrong. And the side is going to be wrong. It's going to be either a squeeze or be forced to liquidate in a day like yesterday. Remember, 2 days, I have never seen 2 days that I'll play the same. Now, once this develops, the depot of the market will be responsible to finding an edge, either in the upper side, as was the case yesterday, or in the lower side, as it is the case today so far. That's to understand what trading is about. Then, or at least what I do is completely different to that. I don't use Market Profile to trade. What Pete here was selling is a software. Selling a software to trade. And if you sell a software or you have a formula to trade, what you're doing, you're using a formula there. You are using a formula, you are using variables there, or to find something, to find a trend, to find an average or something. And if you use formulas, we are assuming that the market is, in other words, the markets are predictable, that we know what's going to happen. We know what the market is about. And markets are irrational. Markets are anything but predictable. Markets are unpredictable. Nobody knows what's going to happen. Okay? We may have an idea, we may have an opinion, we may be wrong or may be right. We often are more wrong than right. What we do when we are wrong is the question. It's one very important question we need to answer. If we have the personality, for some people it's easy to trade. For me it's really hard. I need to put a lot of time, a lot of dedication in this business because I have to rewire. I am constantly rewiring my brain here. Okay. Now, going back to the market. There is tremendous amount volume to the downside here. These big blocks here, You know, this is incredibly high volume here. You know, who has the power to buy 3,000 contracts, for example, in a couple trades? Or here. And this volume, accumulation volume over 10,000 here, over 10,000, 12, 10, 8. 8 is not that much, but it's in between those two. And this, both of them, with direction to the downside. Okay? I'm not saying the market is going to break. The most important thing here to me is the ability of the market has to close this distribution here. As long as this distribution remains open, there is something to the downside. There's something remains to the downside. Now, value or POC is building down here. Was here is being moved higher. What's happening with value? Of course, we have value higher. After the gap, obviously the value is going to be higher. But what happens with value throughout the session is what I want to see here. What happens with value? Can value, for example, come back or get back inside this 6-day range? It's going to build. The market is going to build value. If market builds value here in this area, the market is building value above this breakout, above this range, which will give the market another breakout. You know, we are going from a breakout to another breakout, to another breakout, to another breakout, to another breakout. All the ranges that the market has formed has had a breakout to the upside. It is becoming, to me, it's becoming super risky here. Let's check something here. All right, I'm going to detach. All right here. I have not updated these references. Is this a questionable low today? I would say it is. Here's just, there's something here. I would say it's a questionable low. Here. Yesterday's range is this one. Overnight distribution. Oh, come on. Come on, highlight. I want you to, okay, I want to move you. Yesterday's distribution high is way up here and down here. Alright, this is overnight distribution. Yesterday's hard back is up here or down here. Right, this hard back is here from yesterday. And oh, what I want to show is monitor. Gosh, I can show it. Okay, let's check the monthly here. Oh, there's a lot of. I hate when this happens because I need to do. Okay. Look at this range here. Look at this trend here. It's a liar here. The market has no excess in the upper side. And the same thing happens in the weekly as well. not neutral. And what happens in the daily? The same reference on both sides. Now, these distributions have not been closed, but this market make a double high there. This is a poor intraday low. This is a good odds the market is going to close. Is going to take. This is not a good level for shorts. This one has it was started. This downside movement also started from exactly half back here. Now we have a double high here. The distribution here. To close the distribution, market needs just one tick here. So what are the odds the market is going to close these distributions, right? Now this having some liquidation here. This is liquidation here, what we are seeing here. And all these trades here, again liquidated here. Okay. Did you see how fast that happened? All of these now are out. Where POC was? POC was right there where the market is at right now, at this moment. Okay, the odds that we are going to have rotation increases when the market ends the intraday trend early in the morning, which is what happened here when E took the high out. There was just good also having some rotation here. Now, are you the type of traders that go short in this day to the upside with from these levels? I am not. I am not that kind of guy. Right? Okay, that's now the market is. Notice where the market is right now. Down here is below POC, below fairest prices. There's just some serious liquidation here. This is some serious liquidation here. Can the market re-enter this range? Oh, it happened really early in the first period. And this is why you cannot do two things at the same time. I cannot trade. I cannot trade and do the stream at the same time. It is really hard to do that. And sometimes you will just miss the opportunity. This is liquidation of these longs here. Are you the type of trader, for example? I think that the odds that I would have done something here, as soon as the market takes G low here, that's the end of this trend, of this rotation. Okay? First trends to the downside, it ends with E. So I stop looking to the downside once E happens, and once H happens to take G low, I just want to stop looking to the upside. Having these highs here, double highs, kind of that's a question of high, right? But the main thing, the main message that being delivered here is the market did not have the power to close these distributions here. That's the message. The message is not the high, the double high here, and the odds. From my point of view, the message is The market could not close the distribution. It was just so close. And this is one trade also that is very, it happens. This is one type of trade. This is one trade here. Failing to close, failing to take a reference, which in this case is, let's name this. Let's name this, because this is very important here. This is distributions closed. The market failed. And oh, look at this. Look where this big volume selling was. Right there. This is something also. And this is why you always have to be observing and watching the market. I didn't see this. I forgot about this. What is that? That's the second time the market have big prints here. I don't know, big blocks here. You know, somebody really big was or started something here. And you just take your odds, right? Location is everything here. What are the odds here? What am I? Because the fields, and the entry is always going to be speculative. And coming here, being short here, what is my exit? What the market needs to do? And remember, if I am going to trade against the trend, which is to the upside, well, what happened? This is higher. This is higher relative to yesterday. Value is way higher. If I am going to do a trade to the opposite side or against the trend, it has to work really fast. And where's my exit here? Where's my exit? You know, I know these are risky because of this. The message, however, being delivered, the market didn't have the strength to close the distributions. Closing the distribution means that the movement to the downside is not that serious. And my exit is just, you know, if the market comes up to here and close the distribution, I'm out. That's the market telling me, you know what, you're wrong. Right? I'm not going to let the market coming all the way up to here or take this high or take this high. If that happens. Now, this kind of pullbacks, okay, notice well this period has been bought. Something that I like also is this kind of movement happening right at the beginning of the period that is opening. In this case, H open, and I guess between the first 5 minutes, and which is what I like. Within 3 or 5, right? It just comes down to here, and then you have acceleration here. Notice where this market is being bought from the high of the range, where yesterday was being bought from again. Okay, from the low of this previous day, from the opening, from halvback, previous day halvback. Very mechanical trading here. Very mechanical trading in both directions. Here, here, here. The difference from yesterday is that now we have higher volume, higher pressure to the downside here. In this, right here and right here as well. High volume and higher volume, which is about 10,000 in this area and in this area as well. Now, overall, what's happening with the market is something else that I watch, and I try not to forget what the panoramic view. If I take a panoramic view of the market, what I will see in the daily, weekly, and monthly time frames here. I missed this. I missed this. I wasn't present in this market. This is something really good here, because what happened here is you have a good opportunity in this area here with low risk, because before you enter, you know what needs to happen, and you know what will happen if the market doesn't do what you are expecting the market will do. You just get out, and the exit is very close to your entry. You know, you can go you could go short here somewhere. Again, this is a trend, a trade against trend. Okay, that's against the trend. Selling here in this area has better odds than selling down here. The only reason is POC, right? Not that it's not relevant, it's very important. Shorting below POC is shorting at a very unfair prices. I'm not saying it cannot go lower. I'm not saying that. Alright? But this kind of pullbacks here really scare the hell out of traders here. Okay, it is 1:20. Unless you have any questions, I'm going to call it a day. And I wish you a good rest of the day. Stay safe. See you tomorrow. Oh, something before I go. Something that I was I didn't post anything in the morning. Oh, here in the morning because I was focused on the market, and this is so I consider this is really important. Well, most traders just use these charts, right? But the information we can get from this kind of charts is we can have more information here, right? But these kind of things are also quite expensive, but we don't need it. We don't need this. We can make our own market profiles. We can use an Excel sheet and draw, you know, and draw our market profile. Now the high has been taken here. I mean the low has been taken here. Low has been taken. All of these loans have been removed now, are out of the market now. New ones. This could be a new buyers coming here, or more selling. Remember, this is way down here. There are very unfair prices here too, if you go short here. Very unfair prices. All of these loans, this could be just loan liquidation. All of these loans here have been liquidated here in this period. We always have to be monitoring that. Now this tends to attract traders as well. Market is breaking here. We're going to go short down here. This low is very questionable. Remember, this low here, we were talking the market is being bought from the high of the 6-day range. Now We have excess in the lower side. However, the excess, the lower the market's right at POC. Hmm? It's right at POC. This one is this low is good now. Okay. Now there's accumulation of volume here, right where the market stop at that. The good also the market is going to take this one because and after this the market can't keep going low. Now, if there's going to be any problems here, where is going to happen? We have 4600 here. Okay. The main message here, the market could not close this distribution. That was it. Are you in the market here now? If you are, this could have been a good entry here. The second time the market got out of this range, not because it got out of the range, but it is market generated information here. You got this distribution not being closed and market re-entering this range, which actually targets the opposite side of the range. But first, the market has to deal with 4600, with overnight low, and this area as well. Overnight inventory is very low. Okay. These longs here are being forced to liquidate here. You know, oh, okay, the money, this is not going to the upside. Well, how do you close your position if you are long? Yeah. Bigger traders can see that. What bigger traders are doing? Remember what bigger traders are doing here? Remember what happened here, what happened here, what happened here? What the big traders are doing. You know, and you will see this is big trading because a small trader cannot buy 3,000 contracts. Alright, that was a push to the downside. I think, you know, what's happening here? We have two distributions here. Now I want to see another distribution being formed here, this time inside the 6-day range. Remember, yesterday the market had the chance to print an outside day. It didn't. The next thing is overnight inventory was extremely long, 100% long, very elongated market to the upside. And the next thing, directional move to the upside, to the downside with high volume, which increases the odds that this movement to the downside was something else than just counteraction to overnight inventory. And finally, the last piece of information today, the market failing to close, not closing this distribution. It is not about you know, I'm going to go short here, I'm going to go long here, I'm going to do nothing here. These labels, these references here are used to monitor the market. What the market is doing around those references can help us to identify who is doing what. And if you don't have market profiles, you can just draw your profile by hand. You can use Excel spreadsheet to do it. And it will help you to see, you know, you will see these highs, for example. You will see these highs if you draw your market profile, which we don't see if we use charts like this, for example, or these ones here. Look at this nice momentum here, really nice. There was somebody tried to catch a knife here. Now somebody tried to catch a knife here. Look at this volume. You know, we have congestion with low volume and nothing here, just nothing. Something starts to appear here in this area. Yeah? This is the step of the staircase or the ladder here. All right. Okay. So I say before, unless you have any questions, I guess I'm going to call it a day. Stay safe. See you tomorrow. Bye bye.